Wednesday, April 10th. Market analysis, Stan Ehrlich, and we have got some big stuff today. Big break in the stock market indexes and a major reversal in silver. And it looks like the metals are going to start going down. And let's get right to it. This is the E-mini June futures contract, 15-minute chart, and I'm looking at a little bit larger perspective from what I usually look at to show you that this morning at about 5:30 California time, some numbers came out that the market didn't like very much. And after a knee-jerk bullish little pop for a matter of 60 seconds or less, which made new highs for the 1, 2, 3 previous days, Friday, Monday, and Tuesday, and then all of a sudden collapsed enough to make new lows for 3 weeks. Markets bounced back to around the middle of the range of a 10-point range, I believe, 10 or 11 maybe, today so far, and then sank right back down relatively close to the lows where we are right now, down about 65. I think before the close of business, there's a chance we could make new lows for the day. And if it can close at least below 51.90, we will not only have a new low for 3 weeks, but we will also have a new low close for 3 weeks. Even more bearish, in my opinion. So what we've got is another day today, extremely similar to the very big break that happened on Thursday of last week. And that was also a bearish engulfing, like today's activity is a bearish engulfing. So I'm going to reformat the sizing here and zoom in a bit. So we have actually had a bearish engulfing on the top of the market. The date was April 1st, April Fool's. 1, 2, 3 days later, last Thursday, we had another bearish engulfing, and today, so far, if we stay lower than yesterday's close, and that looks likely, we'll have a third bearish engulfing. The reason I mention this is I have not seen 3 of these things within a 2-week period, for example, that I can ever remember. Now, the implication or the assumption, and it's probably incorrect, would be that after 3 nails in the coffin, we're going to go down a lot more, a lot faster, and all that. Now, I've said for quite a while that we're going to go down, but I didn't expect it to be, and I don't, a really bad, big, fast crashing move. And again, how far down are we going to go? The first stopping point in oversold conditions based on daily data, not the 15-minute, probably is going to be in the area of 51.25. I would say 51.30, 51.20, a little red zone I've got here. Decent support, and by the time we get there, maybe by the end of the week, we should be pretty oversold and prime territory for a bounce. Next idealistic circumstance, same kind of situation, about 5,070 to 60, 5,060. And then there's another one. But that's not all. I am actually looking for this zone here, which is down at 49.05 at the beginning to as low as 48, let's say 05 again, 48.08, 48.10, very, very low 48s, maybe is my final in about 1 to 2 months downside objective, and that's about as best I can do at the moment. It may even make new lows for the day while we're still yakking away here. Next chart is the daily data on the spider. As you can see, the spider is almost made, or maybe it did make, minor new lows for the last couple of weeks, not quite as long as the E-minis, but the same situation technically. So it has a gap to close. That's one spot where it might start to bounce again. And off of some other lows, going back, stair-stepping back in time to previous important high combination, low combination situations. So my real downside objective, as I've been saying for, I don't know, 3, 4, 5 weeks maybe, 477, a little bit below 480, and somewhat below that. Next chart is the spider, 5-10 minute chart. And I got to get the correct, okay, here we go. Now, it did apparently make a tiny new low this morning, just after the opening. This is a 10-minute chart. There's the bounce. And now we've tested close to the lows, bounced a little. Again, I'm not going to be surprised if it doesn't make new lows by the end of the day. Next, we've got the daily data on the QQQs. They're holding up a little bit better relative to previous lows, but I don't have a lot of hope. If I'm right on obviously the spiders and the S&P and so on and so forth, the Qs are going to go bye-bye, and I think they're about to. And what I mean is, of course, get down to this yellow line at first at 432, and then there, and then there. And that's where I really think it's going to bottom out in 1 to 2 months. Next chart. QQQs on a 5-minute. The alarm bell is going to go off when we hit this blue line because of it being a downside breakout relative to how much data? Back to February 22nd, I guess. So that's 6 weeks, if it happens in the next day or two, about new lows and the Qs. A very important continuing to work its way down situation. And the daily data on the NASDAQ, June futures contract, when it hits this little blue line, Katie bar the door, I think it's going to start to crash again. And could be by the end of the day or this week. Next, well, there's that crash this morning in the 1-minute chart on the NASDAQ futures contract, June. It actually took less than 60 seconds for probably 70 or 80% of this decline to happen. That's how fast these things can move and do move. A lot of people that are relatively new at trading don't realize it happens. That's why you have to have good money management, your protective stop loss orders in place when you get into a trade. I feel sorry for the people that were buying on this little rally for 1 minute this morning and not having protective stops in immediately. Next chart is the Russell. It has a little support at today's lows, which were the lows, give or take a little. Let me move this to the side. Yep, exactly. Give or take a little. For the last, well, I don't know, I could say again, 5-6 weeks. Sorry about my lingering cough for a couple of months. So it's well on its way down, probably leading the way for the most part. But we did gap down. Oh, darn. So gaps are almost always closed. Exactly that great example when on April 1, the next day, April 2nd of this month, April Fools, we gapped down the next day. But it took 2 days to rally, close the gap, and then down we're coming. So I'm not going to be completely surprised if this gap is not closed and then on the way down. Give it a week or two, maybe even less. Okay. This is simply the daily data on the E-mini Russell. Same thing, pretty much, but no gaps. Trades, almost 24. Next, notes, bonds. Talked about this channel for a while now. We're getting extremely close to the bottom of the channel. We're also extremely close to oversold. A little bit, and we're low and last. And beginning to get into a support area. Not a great support area, but that's about all we got in this ballpark. Combination of support, oversold, and the bottom of a channel add up to a bounce. Probably back up to about 1720-ish, and then down again, taking about another month. Notes, same timing, same kind of commentary, except notes had, and here it is, this double top formation I've been talking about from the high on December 27, and almost the same prices, very, very close. February 1st, another high. Down, overbought conditions in both situations. Topped out, broke out to the downside, came back up to resistance, made new lows since. The double top downside objective measurement is this little stick right here. And that led me to believe we were going to get down to 108, 28 and a half or whatever I was saying, a little below 29. And today's low is probably low and last at the moment, 108.06, 108.06. So it's already almost a full point lower than the minimum downside expectation that the formation provided us with way back on the breakout day of February 5th, 2 months ago. So it worked. What now? Overbought officially, sold, oversold officially. Big down day, kind of like exhaustion and weakness. Are we going to bounce out of this? It might drop off 1 or 2 more days and then bounce out from a little lower, just like the stock market indexes. But I don't know. This is one of those situations where it just might have another large gasp down real quick and then do what I'm expecting, some kind of a short-term rally. But this is going lower, in my opinion. It might even get a lot closer to the lows that they didn't think we were going to test on October, of course, the magic month, 23rd, with a bullish ER buy signal smack dab at the bottom of the interest rate market, both notes and bonds. Well, we'll see here what happens. This is the notes on a 5-minute chart, and it looks just like the indexes, of course. Bad news, kaboom, crash. And we've had, a lot like what I think might happen before the close in the indexes, a test of the support for a very short period of time, and then making new lows again, boom, down. So look at this carefully, because this little part of that leg down is what I think just might happen here in the S&P. Just a second. And spread this out. Oh, boy, it's actually kind of started. Getting below that low and then sliding real quick, like I just showed you on the notes chart. This is not a 1 minute, it's a 5 minute. But I think it could happen on the indexes. Next chart, crude oil. Overbought, upside exhaustion gap, talked about that pretty much the day it happened. Probably the 5th, April 5th. Didn't get to the resistance area that I was hoping for, but it did get overbought with that gap. And those gaps, I think I probably told you, there are basically 3 types of gaps. Exhaustion gaps to the upside, that looks like a good one. Breakaway gaps from a bottom or top beginning an up or down move. That's breaking away from some kind of a bottom of some sort. Could be a V bottom, a 1-day thing. Might be a bullish engulfing. And midway gaps, which are halfway in a move and very hard to decide that they're a midway gap until after a lot of the move is over already. There is a 4th kind, and it's called a common gap, and it's, well, it doesn't fit anything else. It's a common gap. Next, we have natural gas. Minor new highs, last couple of weeks, still in this kind of support area, I have to say, because as we came down to it back in December, bounced very, very nicely with a good signal in there too, good trade. And then on the way down, good trade. So came down to support again, got oversold again, moved out of it feebly, not very well, good trade, but very minor profit. So came back to support, tried to bounce, broke the support, got oversold, bounced, but we are not out of it even. So I'm a little concerned that this doesn't have enough strength to go anywhere, and it might even make new lows for the whole trend. Not sure. I'm going to have to pass on some really good comments. And so next, gold. Down below at the moment yesterday's lows. And Michael, you're going to owe me $1, and that refers to a little joke we've got running. from Monday's bars closing Ninja Trader show that I did between 12:15 California time and 1 o'clock, the closing of the markets in general. Go listen to the shows. Well, Michael's an old friend of mine. So I think gold has topped out yesterday. I don't have a signal, too bad. It's acting the way you would expect if it just simply rolled over quickly in a very, very overbought condition. That's what clued me into it's coming very soon. So I think yesterday was it. Sorry we didn't get a reversal, so I could have screamed bloody murder yesterday, like I did on this day with the red and on the bottom with the green, and we did get the bottom of the gold market. Next, I'm sorry to say we didn't get the low on the silver. Too bad. Some great signals, though. But guess what we've got today? We've got a red bearish ER sell signal and what appears to be a good day trade in progress. But I will pass on the comments on that for the moment. Outside down day, bearish engulfing pattern in very, very overbought conditions. Let me see if I can squeak that down. Yes, indeed, good. The overbought level in the last couple of days was 95. If you squeeze the data on this daily data chart so I can see here, well, let's go back to some really wild tops. Okay, that's plenty of them. Look at all those wild tops we've had. Now let's put the horizontal cursor line at 95 on my RSI chart on the bottom. This RSI level is as high or higher than almost every single one of those wild tops. That's how important this high could be. And it's got today a bearish ER sell signal. What can I say? The profoundness of today's reversal, if it stays lower than the close of yesterday, should be extremely profound, but it's got to close lower than yesterday's close. Looks like it could be a whopper. Next chart, platinum. Slightly lower, overbought, expected to start to slip back down. Today's low just barely touched the first little support area, which is not that big a deal. Probably going to come down to 902 again, or close, quite a bit close. I think we may have turned. Next. High-grade copper also has a bearish engulfing, but also hitting my resistance area. And I must say, it's too bad it didn't quite get to my minimum upside expectation at 4.37 because of the head and shoulder bottom formation that developed over quite a while. I think this is almost a year in forming. But it worked out so far, and I think it just died because of the bearish engulfing ER sell signal. That's it. I don't think we're going to get to my objective anymore. I think we're going to come all the way back down into the support areas. I'm kind of looking at 402 on the down or more. There's a gap to close on top of that. So this will be the first bounce spot at 413. Close the gap, get oversold a little, bounce, then come down to support again. Next chart, soybeans, corn, soybean oil, meal, corn, and wheat. Well, beans have made a new low again. I gotta say, I think it's gonna not hold here, but we're at a critical spot, closing below where we are in the next few days, and then going down a little more will tell me that the low of the move is going to be tested at 1128 and probably a new low. Next, oil, soybean oil, new low again in the last 3 weeks. And the same commentary goes for soybean oil. And that's going to begin to ruin a larger formation I have mentioned last couple of days. And I'll just let it go at that because it's starting to look not so good. So why talk about it? Next, meal. Basically the same stuff, but meal's holding up better. It's just going sideways for the last, 3, 4, 5 weeks maybe. And I got to look for an upside or downside breakout before I start screaming bloody murder here. But I will say this, we caught the low in the meal exactly to the day. We caught the bottom of the soybean oil to the low exactly to the day. We did not, unfortunately, catch the soybeans. Corn. We caught the low exactly to the day. Wheat. We caught the low exactly to the day. Going back to corn. Sideways recently, no breakout yet for the upside downside support resistance, which in both cases is not that important. The long-term trend is your friend, and this is definitely down and down. Hey, head and shoulder top way back then, classic, damn good pattern. Anyway, history. So I'm looking for a test of the lows. I'm looking for minor downside breakout below 425. A test of the, so far we picked the bottom. But that's been a pretty good move. But remember, buying a bottom in a bear market, you got to have something else to correlate with it. It's just going to cause rallies in bear markets. And that bottom picking low didn't even work. So that was a false one. This one worked for a few days. That wasn't terrible. And this one is probably a failure, small loss. Okay, looking for new lows. Wheat. Picked the bottom so far, but I can't help it. I don't trust the rallies in grains, looking for new lows. And now cattle. Below yesterday's low currently, oversold. I think we're still trying to bottom out here. I'm not sure that it's going to make another new low. It might below 171.40, but maybe not go down too much further. I think it's trying to build a little bottom in here, but I have not much more to say than that. I would feel uncomfortable going short, I'll tell you that. And maybe it's a little too soon to be a buyer. Hogs. Upside potential exhaustion gap in hogs today. Going right smack to the top of the resistance area and stopping so far. It's not far away from it. Classic combination of the end of the resistance area and a potential upside exhaustion gap in overbought conditions for 4 days now with an RSI level of 88. Yeah, too much. It's over. I think the hog market's about to go right back down starting tomorrow. And today could be the day to go short. I can't be sure of that, but it sure looks like a nice combination. Next, we've got the ICE charts, so switching, and we've got the unleaded first, well, coffee. Gosh, it's almost the same thing. Overbought, trying to top out, failure to make a new high so far. This looks like it could open lower the next day and start to drop fast tomorrow. But it hasn't started. Don't go going short on that kind of comment. I think it's topping out, and that's about the best I could say. Next. Well, we might have a bullish breakout finally in this pennant formation. I need to close above the top of the pennant, which it's at right now. The higher, the better. The high today is a new high for a few weeks. That's not bad. Next thing to do is to close the new high ground for the last 4 months, 5 months. That would probably put it into enough strength follow through momentum situation to blow away the old historic high back here in November 20th, on November 20th. Well, orange juice looks like it could make new historic highs again. Next, cocoa just won't quick. And here's an example. Cocoa is doing what orange juice might do soon. It's overbought again. And that's how maybe, you know, shoulders and a head and later on a little shoulder forms for head and shoulder top. But that's way premature to talk about. Cotton, buy signal didn't work. Got out the next day, small loss, not bad. Got in cheaper than the green dots because it opened below them. And I'm waiting for a bullish signal. But my downside objective at 82.88 is just simply getting closer and closer. We might drop that fast, that quick, in more overbought sold conditions going down to my objective before it turns. I can't justify a turn yet. And here we go with our sugar. Coming back to the top of the pennant. Well, that's not really a very good pennant. I just got to say a bear trend line. And trying to hold. I don't know. I'm going to pass. And what about RBOB gasoline, unleaded gas? Well, although we got the top of the market to the exact day on September 15th of 23, we didn't get a sell signal so far on the high day just a few days ago. And I don't see a lot of bearish activity here, something that caused me to scream bloody murder long-term top. I can't. Bull markets do exactly what this bull move has been doing. They get overbought, they settle back a little, they go up to new highs, they settle back a little bit after being overbought. We didn't get overbought, but it did dribble back somewhat. Then it did it again, overbought, and so they're stepping its way up. That's the best I can say. Not good news for the price of gasoline. And coffee. Talked about it. You guys have a great day. A lot of stuff going on. I want to check to see what the indexes are doing right now before I part here. I can see they've apparently bounced up some. Give me a second. NASDAQ. Oh, okay. Here. Bingo. Well, they did jab down a little, but they bounced back pretty good. Right now, 52.09. Last time I took a peek, they were around 51.90-ish, I think. You guys have a great day. Signing off.